November 1st, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using NinjaTrader 8. This is what the chart looked like today. It looked like a big M structure. There was a rally, two-legged rally, you could say, a pushback, another small little rally, and then a sell-off. This sell-off was multiple swings, and this is how I drew the charts. So I kind of try to contain all the price action in one big move here, but this big trading trend channel didn't really help too much. So I was working with these smaller trend channels. Sell off, another push, and then there's this loose, I guess, red down channel that I eventually found, but this is very late in the day, so I didn't really have it as a key entry point to try to take a trade off of. So it looks like it touched here and here, but that's because it's after the fact, after I made the touch. I took the photo. I took a total of 4 trades today. I lost on 1 and won on 3. Now these 4 trades I'm not particularly proud of. They're all very aggressive. One wasn't even a clean setup, and then trade number 2 wasn't a clean setup. Trade number 3 was a knee-jerk reaction. It was an instant reversal, or not instant reversal, but it was a quick reversal of my position because I lost on it. And then trade number 4 was also, I would consider, a little more aggressive because it was just kind of something that I saw and I jumped on it. And after that point, even though it was a win, trade 1, loss, trade 2, win, trade 3, win, trade 4. But these 3 wins just barely washed out the loss of trade number 2. So after that, I know I should just stop, especially after the first trade when it was profitable. It was a little bit risky. Especially after trade 4, then I knew I was like, okay, I'm not in tune. I'm just getting very reckless. I was very lucky to kind of be a little bit profitable above break even, but this is just not a very good thing to have done. So I'm going to get into the trades right now. The only economic data that came out was the average hourly earnings and the non-farm employment change, as well as the unemployment rate at 5:30 Pacific Standard, which is about right here. Now, you could argue it really didn't really do that much. And then the second piece of economic data that came out was at 7 o'clock Pacific Standard, which is about right here. And it was the ISM Manufacturing PMI. So all in all, the news items that came out didn't really affect trading too much, at least in my opinion. So here we go. Oh, this was the pre-market highs and lows. I'll go ahead and extend this out, but it didn't really do all that much in terms of acting as a key entry point. I mean, you could argue maybe over here looked like it was going to have some kind of resistance or a push, but I'm going to go ahead and remove it because it didn't really do too much for my trading today. So the pre-market prices were already kind of pushing up. And initially, I thought the trend line here, making a trend channel, was where prices were kind of floating in. But it didn't fit that well. So I did find this yellow one right away. But right up to the open, I did see a setup, but unfortunately it was in the pre-market, so I wasn't around to take it. It was a new high double top here. Actually, I guess you could argue maybe a triple test or triple top. I usually count this as one. It's a first entry long, pullback, second entry long, potential second entry long failure, but you also have a new low, first entry short, second entry short. I like the second entry short more than the failed second entry long because it is a break of this green down channel. It made one attempt down, pull up, second attempt down. And I like that it moved 2 ticks above. Actually, I think I'm wrong. It's a full point above and then flush down. So a possible trade, rejection off the EMA, which was holding support before, but it made one attempt up, second attempt failed. So it's probably going to test the low of this green down channel. I thought this was a possible trade, but as I said, I don't trade the pre-market. Prices start moving out. And this actually sets up the first trade, and I will say it's rather aggressive. So it's a new low here. Remember, this yellow up channel, or even this trend line, doesn't really exist yet. I was playing with a number of trend lines initially because I was thinking of something like, could this be it? Could it be here? And I think at one time I had it here, but I really only had 1 touch, 2 touch, so not something I really trusted. And I also had one here, I don't quite remember. But I'd see a new low, first entry short, pull back, second entry short. It's aggressive. The signal bar for the second entry short is, strong. And I entered before it finished closing. and I'm getting some kind of support off the EMA now. This, let's see, uh, sorry. Okay, it is a strong push up and engulf the previous bar, but that doesn't really justify taking the trade just yet. It's a little far from the EMA. The setup isn't the cleanest, and I think in hindsight, I definitely should have skipped this, but it looked like I entered here, got my scalp. If I move my runner from the double bottom here to 1 point below this guy, pushes up, comes back down. It looks like it's bouncing. It's holding. I'm hoping, so I do find this orange up channel, and it fits relatively well. So I'm hoping there's no break here and prices will continue moving up. So that's what I'm banking on. So I'm holding out for a bigger runner, but then I eventually get stopped out. So what happened was I moved from runner stop from here to below here, pushed up. I moved it to pretty much right here. And then after 1 tick below, and that's how come I got stopped out. When this one formed, I was going to give it a little bit of breathing room. It encouraged me to hold on. It was inside bar, so I thought there's still another chance it's going to push up, bouncing off this orange up channel. Then it flushed down and took out my runner. The runner is actually 1 tick below the total profit target, but at least it wasn't 1 tick above break even. So not a big runner, and then prices then continue moving and it starts pushing up. Starts pushing up. I find this trend line resistance here first, and then I dragged it down and created a channel. It looks like it's obeying it somewhat pretty well. Is it first entry long, second entry long, bad signal bar to go long on, far from the EMA. There's not nothing there. Hits this consolidation area, has breakout and then push down. So right here, that's when I thought, okay, maybe because it fit rather well up here, I'm in this big yellow up channel. It moves up on this green channel here, breaks, tests the new high. So I'm wondering if it's going to come back down, test the EMA, or actually flush down. So I'm waiting and it continues upwards. So then I draw this larger orange up channel. I'm not the biggest fan of it because it only touched once, twice, 3 times, but it broke through. So now it's not super reliable. It starts going in a more shallow channel. So I was playing with the idea that, didn't mean to move that one. Could it be something tighter here into the fail breakout here? I'm not 100% sure. So it does break out and it creates a first entry long pullback. Here, this is actually where it sets up my second trade, and I'm going to say in hindsight, it wasn't a good thing. Even in real time, it really wasn't a good setup. But it breaks out. I did have to do a little bit of adjusting to get this top resistance of the trend channel to fit just right. The way I was seeing it, after fiddling around, because while you're waiting for all this to play out, you have a lot of time to draw a bunch of trend channels to hopefully find something that fits. So I found something that fits. I saw it as a new high. First entry long, pullback, potential second entry long. Boom, second entry long forms. Now, this isn't a good setup because EMA was holding or is acting as kind of like a resistant support area, but it broke through and it's dancing. Here, I should have known to stay out, especially after this doji. But I just got in my mind that, okay, well, obviously prices are going to move up. I didn't think that this overshoot, or I didn't take into consideration this overshoot here could create a matching overshoot. So I enter and immediately I lose. So I enter here, closes, and it flushes down, takes out my entire position. So now I'm just got a loss on it, right? So when this is pushing down this strongly, I'm thinking first entry long, second entry long failed on me. So obviously it's a failed second entry long. I quickly jump in when this closes. I saw this is a decent candle. It's probably going to go back down. So this isn't well thought out because this is definitely an emotional knee-jerk reaction. So I entered here. I was lucky that it pushed down and got my profit target. And then I quickly dragged my runner from up here down to 1 tick below my entry to at least get a free trade, and it stopped me out. And then it kept going down. So this third trade is just a compensation for the second trade. It definitely was me losing my cool, and it wasn't a good trade. I should have just skipped this one, especially after this loss. It's lucky that I actually had it work out for me, but in hindsight, both of these setups should have been skipped, and even the first setup here wasn't the best. I just liked that it was an engulfing 1 tick below and flushed up, so that wasn't, I don't think, a good enough reason to have taken the trade. Nevertheless, I did. It pushes down on this yellow, on this orange down channel. I was thinking, could it actually be here? But I wasn't too keen on the idea of having so much open space. So I treated it as an overshoot, and then it pushed up into range and then made a second failed overshoot. Well, not a failed overshoot. It succeeded in the overshoot, but now it's reversing back up. But I did see this as a new low, first entry short, second entry short. I like that there was one candle tick above, then flush down. But this is an almost trade because this is a strong reversal. Past the break of this orange down channel, it pushed back strongly, right? It pushed back strongly. This isn't a really good signal bar to go short on. And only after the confirmation that you know it pushed down so strongly. But even though you have this pushing down, there's a chance that if this really is the trading channel here, it might want to test the low of this orange one. But I'm playing it against the potential that, okay, so it's going to go short. There could be a test of this magenta one because it wants to test the high here locally. So it's a little confusing. I'm not really sure what's happening. So I decided it's better to skip. And I guess, this reaction here at least got me to my senses like, hey, you're getting a little reckless. So I just kept waiting and it pushed down. It starts pushing up one leg up, pull back, second leg up. I drew this trend line and then I put this resistance here because it was holding pretty nicely, but I need another confirmation on this level and ideally another confirmation at this level. So this sets up my fourth and final trade. It's two legs up. I'm thinking this orange down channel likely isn't going to test the lows now. I'm thinking the overall price action wants to test the highs of this big yellow push. So when it went up, down, it looks like the EMA is kind of holding, but here's everything that's wrong with this trade, even though I took it. It's a good signal bar. So you have a new high, first entry long, second entry long, technical second entry long confirmed here. What I should have considered more carefully is this is a doji bar. Just 3 candles back is another doji. This isn't really the most, encouraging setup. It also looks like it's 1 down, 2 attempts up, test made a new high. So this green up channel may have played out. I'm also potentially, if I trusted this yellow channel going up, it hit the high. So you're expecting actually another push to the low. So when I see this in real time, there's no clear reason to want to jump in on this trade. EMA is somewhat holding support, but it is flat. Nevertheless, I did jump on it. I entered at the highs of this candle because I think I justified it as being, well, this is a 10 tick candle. I'm just going to try to get it. I am already slightly in the red. I'm trying to make back the loss from this trade here. Entered, I got my scalp, and then I dragged my runner stop from here to here. I'm just following 1 tick behind all the way up. And right here, it was where I got stopped out because I didn't drag it up behind this guy because I was thinking it was going to be a pullback and potential reverse back up. But here's the funny thing is when I was in this trade, I was so happy that it was a green trade. I actually had a runner going for it, but I had to, in real time, I wasn't thinking as clearly that this runner and this whole setup was by coincidence. It was just lucky that I actually had this trade going up. So I shouldn't have been so happy. Well, I'm happy the trade worked out, but I shouldn't have been so convinced that was a good trade because let's take this in isolation. This yellow up channel has a breakout here. So if I was still trailing a runner, there's a good possibility it's going to come back down. I should have just moved the runner stop from here to here and probably got another point out of it. But I was getting greedy because the runner was definitively washing out the loss of the second trade. So again, in hindsight, this should have been skipped. These two should have been skipped. This first trade is a little iffy. So after the runner got taken out, I knew kind of like, okay, I'm definitely getting reckless. I'm slightly in the green, washed out the mistakes. Don't trade anymore. It's a Friday. Just be happy. I'm a little above break even. And it was more of like a learning day. So that's pretty much where I kind of hung up my hat on taking any further trades. And I just watched. Prices continue moving. Here's the third confirmation bounce. I treated this as an overshoot as opposed to dragging the resistance up here because it looked like I could treat this as an overshoot, came back, support held, and it had a nice confirmation bounce here. Then prices are moving. You do have a new high. Technically, you have first entry long, second entry long, third entry long. I was thinking about this and I was thinking, was there a trade here? I didn't really like this setup just because it closed below the EMA. It does have a bounce confirmation, but it just, didn't look that clean to me. Prices then continue moving again on this orange down channel. It breaks out. It gets choppy. You have a first entry short, pullback, second entry short above the EMA. Nothing I particularly like. It's a bad signal bar. It looks like it's starting to trade inside this trading range because I drew this and saw this some kind of resistance here because it looked like it was 3 touches and at least 2 touches down here. First entry long, pullback, second entry long. Signal bar for second entry long is nice, except there's no other key entry points for me to justify taking an entry here. There is enough room to the EMA, but that's just not good enough. Then prices continue moving. It was a new low, first entry short, second entry short. I don't like that the second entry short here is inside bar. It is coming up from the top of the range, so you would consider maybe a trade here. But if I was still trading, I would have looked for a higher low here with enough room to step out to the bottom, but it never shows up. Prices then bounce. Another new low, first entry short, second entry short, bad signal bar to go short on. No lower high. Oh, I meant lower high here. Didn't mean higher low. Prices then continue moving down. You have a new low, first entry short, another second entry short setup, except I wasn't confident on this green down channel yet, and it didn't touch the EMA, bad signal bar, so I wouldn't have taken a trade anyways if I, didn't pretty much close off my opportunity to trade because I just figured I'm getting reckless. The new low, first entry short, technically you have a second entry short here. The bad signal bar confirms, but you're so far from the EMA. There's this red down channel doesn't exist yet, so there's no other key entry point to trust this yet. I did see a lower high here, and then when I saw the reaction, I was thinking like, what would have told me to potentially take a trade here? And to be honest, there was really no indication for me because up until that candle, everything looks like it's fitting nicely here. Remember, this red down channel doesn't exist yet, so I could not treat this as a resistance yet. So there was no indication that I should take a short and it would flush down. So if you happen to take it and you saw something, kudos to you. I didn't see a thing. Prices then move down. It's a new low, first entry short. Technically, I have a second entry short here. It's just not a clean setup. Doji, nothing there. You have a new low, first entry short, second entry short. Up until here, I'm not sure what I have. I didn't really have this resistance drawn, so I saw it resist and push down. It's above the EMA. If this candle had pushed below, then I think there might have been a trade. Then you finally get it here. So it's a first entry short, second entry short. Now, if I was trying to take a trade, I'd look for a lower high with a rejection off the EMA. And you don't really get that. It just kind of flushes down. At this point, I do have this red trend line support drawn, but it actually started from here downwards. I didn't have this big guy yet. So it was only going to act as potential the entry point for looking for long trades, but on a clearly bearish bias right here, I wouldn't be looking to go long just yet. I'd be looking for reasons to go short. So then it sets up this, and I marked it as an arrow. It's not even quite a hunch trade because it was a new low, first entry short, second entry short. I was thinking this is actually an interesting setup. It's a break of this green up channel, test to make a new high. I like this candle, but I wanted it to be red. I thought if this is red, there might have been a trade here, and they get a flush down and it bounces off this trend line support, at which point I thought if I was trying to look for a trade, I don't think there's anything here to go short on because it's too risky. You're obviously hitting some kind of support. But in this case, it just kind of flushes through and it just keeps going down. The bias is clearly bearish. It's this consolidation area. It's just noisy. These candles just side by side, nothing really worth taking. New low, first entry short. Technically, you have a second entry short here. It's a push, one attempt up. If I were trying to thinking about taking a short and it confirmed here, I would be very weary because it is a first entry short, second entry short, didn't break below the EMA. This green up channel still wants to test its high, so could it be one attempt up, push back? The next couple candles, could there be a second attempt up with the EMA holding? I'm not sure, but that's what I was thinking about. If I was even trying to consider taking a short trade, I'd be weary of trying to go long. It looks like if you did, you get filled. Depending on how many points you're going after, you probably would have gotten a scalp, but I think it was a risky trade. Jumps around. EMA is starting to hold as support. I saw this setup. I saw it as a new high. It's a first entry long pullback, second entry long. Second entry long, this is a little confusing to me because I did like that it moved one tick down and engulfed completely. The thing I didn't like was there's a potential resistance area here. Now, there wasn't enough candles confirming this to make me feel like this was going to be a strong support. But if I was trying to take a long, I'd be a little cautious and questioning whether this support actually exists. And it looks like if I did try to take it, let's say I entered right at the high, 68.75, I need to get a 69.75. I would just barely make it. It's unknown if I would actually have gotten a fill, but what is definitive is it pushed down, and if I do the proper trade, I would probably keep my stop here, but considering where this is at, I would likely would have kept it below this guy. So that is a big risk. And in this case, it would have worked out, but I think this worked out despite the fact that it's a mediocre setup. And prices continue moving up. It's a new high, first entry long pullback, second entry long. It doesn't have quite the bounce off the EMA. Again, after this red channel, I did copy it and paste it up to here. And so I was thinking maybe I'm working within this big red channel. But after this violation here, because I thought this could be a third confirmation move back down, it broke out. It didn't come back right away. Then I thought, okay, well, it's just be cautious and trying to go short just yet because I, especially seeing this, you're thinking if this resistance is going to hold, then you want to go short and push it back down. But you can't neglect the fact that this is such a strong green bar. Then pushes up, first entry long pullback, second entry long, not the best signal bar to go long on. And it starts reversing back down. It just gets very noisy here. You do have a new low, first entry short, but its count resets. And you have another first entry short, but then you're hitting a potential support area, breaks through, and it finally kind of reverses right here for small little correction, first entry short. But that's all you get, because then you also get a lower high here, also considered a first entry short, second entry short. So you get a lower high, second entry short. I call this an almost trade because of the time of day. If this had set up earlier in the day, maybe there's a trade here, but this is at 12:47 and the market's closing in 13 minutes, and I wouldn't have, if I was still trading, I wouldn't have thought about taking a trade like this. It would have to be earlier in the day, like with a few hours, at least 1 or 2 hours before the close for me to feel confident that there's still some price action because you're entering super choppy area where it's the last 10 minutes where prices are just going to get oscillating really quickly because people are closing out positions, taking profits, going home for the day. So how I saw the charts today, it wasn't my proudest day of trading because even though I'm 3 wins and 1 loss, those 3 wins had to pretty much be completely used to wipe away the 1 loss. And that's the downfall of my risk reward ratio where I'm only going after 1 tick and my losses could be like not 1 tick, excuse me. My profit target is usually 1 point, and then my losses could be like 2 points, maybe 3 points. And so 1 loss usually does set me back a couple of trades. That is a net negative of this strategy. However, the 1 point profit target does get you in and out of trades rather quickly because you're asking pretty much candles to just move 1 point for you, which happens a lot. But if you're wrong, or in my case, didn't read it correctly, took a trade despite the fact it was an ugly setup, then yeah, it just kind of hurts you. But I do trade with runners, so that does help balance out the math. So hopefully that was helpful.